If you're a consumer of oil, and let's face it, we all are, you've probably noticed that there's been some buzz about the commodity recently. So what is all this buzz about, and what does this mean for investors in the new year? We're going to discuss that right now on UBS Trending. Hello, everybody, and welcome to UBS Trending. I'm your host, Anthony Pastore. Good to be back in the studio here with my colleague and friend, Jay Dobson. Jay, good to have you here. There has been a lot of buzz about oil as we ended 2023 and as we started 2024. So what is the buzz? What are you hearing?
Yeah, Anthony, great to be with you again. Happy New Year.
You too.
Look, there's always buzz around oil, right? Oil impacts so many things in our life, most practically gasoline, diesel prices we put and fill in our tanks. Quite frankly, we need only turn on the evening news to see geopolitics. So, really what would be surprising is if there was no buzz. But let me try and break it down. I'd put the buzz, if you will, in three categories. It's global supply, global demand, and then geopolitics, which we mentioned a moment ago. On supply, when we look back to 2023, global supply grew faster than we expected. Most of that was non-OPEC growth happening here in the U.S., in Guyana, in Brazil. But supply grew faster than we expected, so we ended up having more supply. When you look at prices, we need a supply-demand balance, so that kept prices a little lower than we expected. The second item was demand. Demand obviously is difficult to project. It has a lot to do with what's going to happen in the economy. People were rather concerned about the economy last year. Economy ended up being pretty good, pretty strong. And quite frankly, when we look to the developing world like China, we saw pretty remarkable growth. So supply ended up being a little too fast, supply growth. Demand ended up being better than we expected. And so mix that together, that was really what's explaining the buzz. Then we have geopolitics, which we know, tensions in the Middle East, war in Russia, in Ukraine. The reality is there's a lot going on that creates a lot of buzz around oil.
Yeah, I feel like the geopolitics is pretty clear and apparent for anybody who pays attention to the evening news and knows what's going on. But oil actually, in demand itself, hit a record in 2023, which I was not aware of until I read your report.
Yeah, no, it's been growing, and the reality is it continues to grow. We should plan another podcast around energy transition, but the reality is oil demand continues to grow, and most of that's occurring in the developing world.
All-time high, right, Jay?
All-time high, yes.
Yeah. So then this begs the question then for you, Jay. What's next for oil prices? Knowing the year that we came off of and all the 3 points that you just described and went through, what's next in your estimation of what's happening with oil, with prices, et cetera?
Yeah, West Texas Intermediate hit a high at about $93 back at the end of September, and it's been basically trending lower since then.
Right.
To level set people, as we record this, oil is just about $70. We expect it to be in a range of between $75 and $85 this year. I think the early part of this year, probably be at the lower end of that as we get into summer and sort of peak demand season. We'll see that sort of move forward. I think it's going to be an interesting time for oil prices, but probably higher from where we are right now.
Right. So specifically in the U.S. here, and especially when you're looking at supply and demand dynamics here with oil, and selfishly I ask this because I'm a driver, I know you are as well, and a lot of our viewers are drivers. Sure. What does this mean for gasoline prices? And you just sort of teased that obviously we have to look at summer demand, and then there's different pricing that happens in those summer months. What do prices look like for gas?
Yeah, well, let's look at supply, demand, and then gasoline prices. Right. Keep in mind, the crude oil market's a global one, so talking about the U.S. really doesn't make a lot of sense, but it is important to just sort of level set people, okay? From a supply perspective, we expect slower supply growth in the U.S. this year than 2023, but remember, the United States is still the largest producer of crude oil globally as we measure by country, okay? So we expect slower growth, but still positive supply growth. On demand, we're in the developed world, and developed world crude oil demand growth is growing relatively slowly. So, I would say it'll be sort of flat or up slightly. So what we'd expect is that exports will balance that to, sort of make prices go higher. Again, it's a global market, not a U.S. market, but it sort of helps you understand how those supply-demand balances still have to balance, regionally as well as globally. Most importantly, as you were mentioning, gasoline prices. Look, gasoline prices were very high in 2022, then they were lower in 2023. I'd say they'll be flattish in 2024, maybe down a little bit as we look across the year. Key is going to be where oil prices are, but we expect oil prices to average about where they were last year, still higher than we are right now. How much refining capacity is available? If we don't have any accidents, we expect that you'll have a decent amount of refining capacity. So that leaves us with gasoline prices about on average where we were last year. Again, if I were a betting man, it would be a little bit 10, 20 cents on average below last year. The other thing to keep in mind, quite frankly, is it's an election year, so you're going to have a lot of people thinking about, let's make sure we keep gasoline prices because voters will be going to the voting booth sometime in November.
Right. That also includes your thoughts and CIO's expectations for the continuing conflicts in the Middle East, the price that you're estimating, I should say.
Yeah, it's a good point, Anthony. I would say today there is no premium in the price of crude for geopolitical risk. Now, again, there's a decent amount of excess supply. The OPEC Plus is holding back some supply currently. So if you had disruption as a matter of geopolitical risk, you would likely see some of that supply come out. So it's not unreasonable that it's a low geopolitical premium, but it is not a very high one. So we don't have one in there, but it's when we talk just geopolitical risk as a single risk, I would say it's asymmetric risk, meaning it's only really skewed to the upside. There's really no downside to it here.
Great, thanks, Jay. So I know that CIO recently reduced the oil price forecast for 2024. So for investors, especially on the equity side, what are the implications there?
Yeah, well, as I said, we still expect oil prices to be higher this year than where we are right now. We think that leaves a reasonably good outlook for energy equities. We think you've got the higher oil price, you've got positive free cash flow. These companies are still spending within what we call capital discipline, so they generate a tremendous amount of cash flow and free cash flow after their capital expenditures. They spend that on dividends and share repurchases. You put that together with valuation relative to the broader S&P 500. I mean, energy is one of the cheapest sectors in the S&P 500. It leaves a reasonably positive outlook. Now, it's about 4% of the S&P 500, so it's not a huge sector, but we are overweight, have a most preferred view of the U.S. energy sector within the confines of the S&P 500. So we do think it makes some sense to have an overweight. We believe that you should look at quality and large cap names to reflect that overweight.
Great, thank you, Jay. And we barely even scratched the surface on natural gas, which is a whole other kind of part of the conversation, which was down about 44% in 2023. So interesting to see. What are your expectations really quickly for nat gas as we look towards the new year?
Yeah, it's going to be sub $3 for most of this year. I mean, you shouldn't get lulled into it. I think 2025 prices are going to be higher, but sitting here for 2024, I would say, natural gas, we have excess supply and demand is not growing as fast as supply is. So it probably says a cap on natural gas prices, say $3 or less.
Thank you, Jay. And the energy transition continues, which I know is a conversation that we'll be getting into this year as we talk more about what's happening out there in the world, which a lot of people are really interested in. So, Jay, always good to have you. Thanks for joining me in the studio.
Yeah, thanks, Anthony.
Good to see you, Jay. And thank you all for joining us again. And for more information on anything Jay spoke about or any of our other folks from CIO, you can find their publications and research at ubs.com/views. So that's the website you want to go to. It's right there on your screen. And you can check us out on social media. You can follow UBS on Instagram. UBS Trending is our dedicated Instagram channel for all the studio's content that you're not going to find anywhere else. Plus, we're also on LinkedIn, Facebook, and X. And of course, we would encourage you to continue this conversation with your financial advisor. Until next time, I'm Anthony Pastore. Thank you so much for joining us, everybody. Have a great day, and remember to keep your eyes on what's trending. We'll see you soon.